With the war in Israel entering its second week, let's look at some historical data on how the markets tend to react to geopolitical events. Earnings season is also coming up, so let's check out what we have in store for us this week. My name is Den Slim, and welcome to another episode of Monday Market Outlook. The Israel-Hamas conflict erupted last week before the markets opened, and we saw some instant reaction, especially on the commodities markets. This might introduce disruptions in the oil supply chain, so this caused a gap up on oil prices early last week. Usually in a global conflict like this, uncertainties arise, and this caused the markets to evaluate the possibility of further rate hikes. So this resulted into Treasury yields to react with a significant drawdown to as low as even 4.54%. Of course, the dollar followed suit, bottoming out at around 105.5. As uncertainty arises, investors tend to flock towards safe haven assets like gold. So remember that during World War II, gold went up like 300%. The Vietnam War, gold went up like 200%. The 2008 financial crisis, gold went up like 30 to 40%. So we're seeing the same reaction to these geopolitical events right now with a strong rally from a gold bottom here at around 1800. We are now back up to the 1900 level. So a massive rally here on gold last Friday. Meanwhile, the peso dollar exchange has remained steady, at 56.78. Now let's go back to the charts and see what happened on Thursday. Here we have a reversal here. It gapped up and then it went down again, a drawdown, and then it went up, drawdown, and then it went up. What happened here was CPI numbers came in hotter than expected, much hotter than expected. PPI numbers coming in at 20 basis points hotter than expected. CPI numbers coming in at 3.7%, with core inflation steady at 4.1. The rise in CPI mainly caused by the housing market. So the market suddenly woke up. That spike, midweek spike, was the cause of the market suddenly remembering that rates are going to stay higher for longer. Meanwhile, back home, we have BSP Governor Eli Remolona Jr., while retreating from an off-cycle rate hike, reiterating that a 25 basis points rate hike is not off the table for their BSP meeting this November. Now note that Governor Remolona Jr. spent 14 years working at the Federal Reserve Bank of New York. So more or less, we have an idea on the kind of monetary policy that he may follow. So let's look at some historical data, at least for the S&P 500, on previous geopolitical events and how they reacted, or how the markets reacted to these events. The average one-day drop after the news came out is around 1.1%, and the average drawdown at 6%. So actually, markets do tend to take these geopolitical events in stride. It takes an average of around 22.5 days for the market to find its bottom, where it eventually recovered after around 2 months. So if we see the Yom Kippur War and the 6-day war, which was closest to what we are currently experiencing right now, there's really not much of an effect. Most of the effects will actually just be felt on commodities like oil and gold. Now let's look at the PSEI charts. The index moved sideways last week while investors tried to stay in the sidelines. Ideally, we should be able to hold the 6,250 support level here and continue this upward trend as we approach earnings season. Meanwhile, the markets will continue to be on a wait-and-see mode and will most likely just react to news as it comes. Let's look at SEC. As we anticipated, dividend announcement came in at $3.50 per share, a whopping $3.50 per share, which puts the dividend yield at 12.65% just for this dividend. If you were able to get SEC at our buy zone here at 27.65, this actually puts SEC's dividend for this year at 7 pesos, close to around 20% or more than 20% if you were able to buy the dips. So congratulations to those who were able to buy SEC. DMC also came out with an announcement, of course, as expected, at 72 cents per share. But this is already priced in, especially after SEC announced. So again, congratulations if you were able to scoop up DMC shares around our buy zone at 9 pesos. And as mentioned, gold being a safe haven asset tends to go up, which of course benefits our mining stocks such as APX with a gap up this week, and with the gold rally, with the massive gold rally last Friday, we should anticipate APX to also rally when we open up this Monday. Now, not much happening in the local markets. Actually, what happened last week? Aran Investments sold all their stake on Pizza to Century Pacific Group and JE Holdings. SPNEC, which has been suspended for quite some time now, the suspension will end on December 2, which may cause their delisting if they don't comply. And they have their special board meeting at December 4. I mean, what's gonna happen here? Are they going to ask for an extension? They could. Could we expect a follow-on offer before December 2? That's also possible, but we don't know, right? Let's move on to the global markets. Let's take a look at the S&P 500 charts. The index actually brushed off the Israel war last week, rallying up to 4,400. The S&P 500 actually opened up quite low, hitting our support zone here at 4,200 before ending the day. Look at that intraday volatility. So the S&P 500 hit our resistance zone here at 4,400 before correcting to 4,322. Now, if we look at the 1-hour charts, we can see here a rally on Friday after bank earnings came out. JP Morgan, Wells Fargo, and Citigroup came up with spectacular earnings beat. But look at what happened intraday. There's this big drawdown here when news that Israel is preparing for a massive ground strike this weekend. So the market is just reacting to whatever news comes its way, even on an intraday basis. At least the S&P 500 is still up on a week-on-week basis. This coming Friday is the third week options expirations week. And let's look at the options chart. We have a call wall here at 440. We have a put wall here at 430, a massive put wall here at 420. Maximum pain sits at 431. So going back to the charts, what can happen is that we might go down to support level here at 430, bounce back to 440, and then settle at 431. So what's gonna happen here is that we still have a bit of a drawdown we can expect before it hits its demand zone here at 4,280 or 4,300 before we resume another rally, hopefully retesting the 4,400 resistance level. Now, why are we still bullish on the S&P 500? So we have massive puts on the 4,300 and the 4,200 level. So it's going to be hard for the markets to breach that. We are still trending upwards, and by the looks of it, we could retest this trendline resistance in the coming weeks. So let's look at some charts. This is the market breadth readings, which shows that we are actually on past levels where we see turning points. You can see here at this level where the September lows, the June lows, and even the March lows became a turning points for the markets to rebound. Let's look at some data where the past first half of the year was positive and we see a negative August to September. What tends to happen during the fourth quarter is we have been positive all the time so far, 12-0 record here. So hopefully we can look forward to a positive fourth quarter. Also, if we look at the forward PE ratios, we see the S&P 500 coming in at 17.7. Not so expensive but not so cheap either. But if we take out the top 100 stocks, we can see that S&P 400 is actually a great bargain at around 12.8 PE ratio. So what's happening right now in the US? The food industry is suffering a drawdown from the hype of this new weight loss drug, Ozempic and Wegovy. Walmart came out with this report after it analyzed anonymized data where shoppers who bought these drugs tend to buy less food items in Walmart. So this caused food stocks that reported last week, like Pepsi, to go down despite Q3 earnings beats. A lot of people do believe that this drug is a game changer and could disrupt the food industry in a major way. But personally, I think this is an overreaction, and this could actually present a good opportunity to buy food stocks. So monitor the reaction of food stocks to this news in the coming weeks. I think, taking this medicine for a long time may present complications with patients. It can come up with side effects, etc. So it's not really something that you should be doing on a long-term basis. I mean, you're not gonna take this drug forever and then you're not gonna eat. A friend of mine, of course, this is an isolated anecdotal experience. A friend of mine did try to take this drug and it didn't even change his eating habits one bit. So we will see. But for this week, we are looking forward to earnings as we kick off with bank earnings, which will continue on Monday and Tuesday, followed by the start of tech earnings results with Tesla and Netflix on tap. For October, we will see blockbuster earnings of around 70% of the S&P 500 companies reporting by the end of the month. So we will have the same story on weight loss when Coke and McDonald's report, especially Eli Lilly, who also has their own weight loss drug. So a lot of market movement this week will all depend on the news. We have earnings, we have the Israeli war, and of course, we also have economic data coming in with retail and the housing markets that could result into more volatility in the S&P 500. So as the war escalates, we might see some defensive stocks start to rally. Just look out for more war news. Will this war escalate to more countries in the Middle East? Is Iran going to enter into this conflict? We don't know. There's just a lot of uncertainties coming into this week. So make sure to just follow the news. As the war escalates, of course, oil and gold tends to go up. Treasuries and the US dollar will continue to go down. And we may see intraday rallies and 180 reversals as new events unfold. So that's it for this week. I hope you enjoyed this episode. If you found the information here useful, please like this video, subscribe to the channel for more updates, and as usual, good luck on your trades. Please manage your risks accordingly, and I'll see you again next week. Bye-bye.